What's going on, everybody? Welcome to a Capital Hungry Monday market analysis live stream. We are going to be breaking down some fundamentals as well as technicals across gold, GBPJPY, GBPUSD, EURUSD, USDCAD, as well as the US 30 stock market index to map out some potential intraday and scalp trade ideas to execute on through the following Asian session, London session, and New York session tomorrow. Okay? Before we jump into it, please make sure you like and subscribe. You follow all of the Capital Hungry resources and learn as much as you can about these financial markets as you are involved day in and day out. So you have all of the various resource links within the description, on the YouTube layout itself, and even on this little stream reminders animation that's going to come up to your screen there. Okay? Okay, so some key fundamental points to focus on. It looks like Q4 is still holding overall a macro optimistic sentiment. We can see this is very evident as global stock markets are still very bullish, sitting at all-time highs. The volatility index is relatively bearish, and the Japanese yen is also very bearish. The US dollar is holding more individual bullish strength, but that is coming from the fundamental factor of the Federal Reserve's tapering process to come, and investors starting to price that in, especially as US economic data is still very solid. We had a little bit of an indecisive labor market report last week, with NFP being bad, but unemployment data still being very good. So overall, we had this very strong whipsaw movement on gold, but the US dollar is still holding strength, and gold is still higher time frame, more on the bearish side, as the overall labor market data is still rebounding and back at pre-pandemic levels. And the Federal Reserve does not need to see crazy economic data figures to really start the tapering process. And we understand if the Federal Reserve gives more hints towards starting tapering, that it's going to bring a lot more strength and demand back into the US dollar, and also start regulating that massive increase in supply of the US dollar we saw over the last year and a half, which is the primary reason the stock markets have been so bullish, has been due to the money injections and asset purchase program the Federal Reserve has done, right? So there's no high impacting market fear, uncertainty, or doubt. We're seeing some Brexit tensions sort of come back to the headlines, but over the weekend we actually had Bank of England give some hints towards interest rate hikes, interest rate increases for the UK economy. So that's one of the reasons, if you guys noticed, GJ was already starting so aggressively bullish right away to start the week, right at market open, and through all of the sessions pretty much continued bullish as investors were pricing in the rumors of interest rate hikes to come, which is obviously the answer on the poll you guys have right there now, where if the Bank of England was to give rumors toward interest rate hikes, what would be the impact on GBP? And you can see that the correct answer is bullish. Okay, the focus this week, later this week, is going to be on the US inflation figures, which is going to give us more information and hints if it's time for the Feds to start tapering off the stimulus support. But overall, the tapering macro sentiment still is what looks the most viable and probable, meaning that if the Feds continue to give signals towards tapering, the volatility index will still remain flat. The stock market might get a bit softer, but in my opinion, is still going to keep chugging away gains into the end of the year. But the US dollar will continue a lot more bullish, and gold will be a lot more bearish from those fundamental confirms if we do get them accordingly. So in terms of economic events, the focus for overnight as well as through the next few sessions is at pre-London hours, 2 a.m. Eastern. We have the UK jobs data with the claimant count job change and the average earnings index. In my opinion, the job sector is still rebounding within the UK economy and is at pre-pandemic levels. So most likely we're just going to be seeing pullbacks and continued buys on GJ, or break above current high buys on GJ. I also expect Germany's ZEW economic sentiment report to be pretty good. So this economic data, in my opinion, should be good over over London session, which will keep UK and Euro equities relatively hot and the Japanese yen more bearish as a safe haven currency. And then at 10 a.m. Eastern, we have the US JOLTS job opening. Now, I still think that this report is going to be very good. Within the US, one of the reasons why the NFP was a bit off, or we saw that the labor market data is on a bit of a decline, where it's still improving back to pre-pandemic levels, but it's on a bit of a decline compared to prior reports, is because of the vaccination mandates by various companies and by the government. So there's a lot of people who do not want to get vaccinated, and they have been forced to leave their job, and this has obviously impacted the employment sector in the short term within the US economy. But the amount of job openings and the supply of jobs is still very high, right? So you can see that with the US JOLTS job opening, most likely that report is also going to be very solid and most likely will bring some US dollar strength. So when we're looking at our market sentiment across the board here, if this loads, TradingView loading, so you can see the stock markets have had a bit of a slump from their all-time highs, but are overall still very bullish across the board. When you're looking at UK, Dow Jones is well above 34K, sitting back at all-time highs. And Japanese yen, as well as the volatility index, are still relatively bearish. So macro market optimism is still very much evident. So when we're looking at GJ, to keep it very simple, you can see that off that daily demand zone, for everybody who has been following the last few market update webinars, we have been in a bullish bias on GJ, as we have been respecting this demand zone at 149 area. We have this potential to revisit we have the potential here to revisit these high points at 156, and overall we've just been in bullish market structure on GBPJPY, just having consolidation zone breakouts or pullbacks and breakouts, continuing us up in overall bullish market structure for the last year and a half. We've also had the Bank of England over the weekend give us some more hints towards interest rate hikes to come. And with the economic data, I expect it to be solid. And we're also clearing above all this price sensitivity to the left, with the potential now to start making our way back up into these 156 previous highs, with very strong bullish price action on the intraday timeframes and very strong bullish market structure as well. So when I'm looking at GJ with the intraday bullish market structure as well as the PPLs, I'm looking for a couple of things. So if we break below 153.8, then I can anticipate a bit of a deeper pullback. Then I would take some pullback sells on GBPJPY just to set up better risk versus reward buys, where I'd be looking for deeper pullback and continuation buys from 153.200 and scaling back accordingly. Otherwise, if we do not break below 153.8 and hold above 154, I still see buys on GJ from 154, as the current bullish momentum is very strong and we have a lot of bullish order flow in the market due to that fundamental catalyst of potential interest rate hikes to come. And if the UK labor market data if the UK labor market data at 2 a.m. Eastern at pre-London is good, which I think it's going to be good. Obviously, I'm not always right, but I personally think it's going to be strong. If that data is strong, it further supports the Bank of England's rate hike rumors to come, which is a bullish factor for GBP, and we know the Japanese yen has been very bearish. So I'd be looking for buys still at 154, 154.2, and breaks above 154.5. So I would only be looking for sells just as deeper pullback sells, as obviously the way the market trends when you have an intraday high printed, if there's not enough buyer order flow to break higher, there's a higher probability of a pullback being created, right? And then collecting more order flow from a better demanded price point before continuing bullish. So when we're looking at GJ here, I would only take short-term sells if we broke below this last price sensitivity area that took us into these minor intraday highs, and then I can anticipate those short-term sells to set up better risk versus reward buys as the red box being a sell area, green boxes being buy zones. And this is going to be more evident if we have the confirms that UK equity markets are still sitting at their highs, Japanese yen is still bearish, and of course UK labor market data is still strong overnight, and we follow these pathways of price. But that pullback is only if we get those confirms. Like for example, when you're looking at GJ from these lows, you can see that the pullback is going to be dependent on price action. So you can see that you had this upside move here, and then you came to print these highs, and you have a very aggressive pullback. In this situation, I would have only taken advantage of the pullback to retest better buy areas, right? To retest better buy areas. No, the Bank of England impact on GBP is not the same as the Federal Reserve impact on the US dollar. The British pound currency is a risk currency and is not a safe haven currency or the world reserve currency compared to the US dollar. And even though the money supply increased, it was not even close to the US money supply increase. Okay, so it's a bullish factor. And also if the Bank of England starts to look to increase interest rates, that's a bullish factor for GBP. Just like if the Federal Reserve starts to increase interest rates, that's a bullish factor for the US dollar. So Jack John, you have it backwards. When the Feds look to start tapering and increasing interest rates, that's a bullish factor on the US dollar, not bearish. All right. Okay. But anyways, so I would not have been taking advantage of any GBPJPY sells unless we broke below this price sensitivity area to set up for better buys. And you can see yeah, but you're trading GBP against the dollar or against the Japanese yen, which is a safe haven currency, right? Where the Japanese yen and dollar were still a lot weaker compared to your risk currency and your basket of risk currencies. You still have to look at what you're trading it against. So all of those risk currencies against safe havens got bought up from historical lows during that process with the support of the market optimism and central banks. But anyways, so with GJ, I'm just trying to anticipate if we do have a pullback, how large is the pullback going to be? Is it just going to be a minor pullback like something like this, and we're going to continue back bullish? Are we just going to create a bit of a consolidation zone and break to the upside? Or are we going to have a deeper pullback below this price sensitivity area and then continue back up bullish? So that's why I would only be looking for the potential pullback sells in this situation if we break below 153.8. But otherwise, what I'm primarily looking for is overall buys to the upside. Sticking with the GJ buys, just saying we could have the probability and potential for a pullback. And that pullback would be more evident if we break below 153.8. Then you can expect GJ to have a pullback to retest 153.2 and so forth. Okay? But so far, price action's looking very bullish. So most likely, we might have something like this happen. And then come back above, take buys, and scale in buys. breakout above 154.2 buys, and breakout buys above 154.5. This would only be pullback to set up continuation buys in that fashion. Okay, so GJ more on the bullish bias, understanding we have that Japanese yen weakness. We have the rate hike rumors from the Bank of England. UK equity markets are still staying relatively hot and playing the bullish price action and market structure with the labor market data pre-London hours. Now, GBPUSD is in a bit of an interesting situation because even though we have some strength in GBP individually, the US dollar is still sitting at those high points and intraday highs and still relatively bullish. So the US dollar, because it's the world's reserve currency, it dominates whatever currency pair it's in. So even though you've seen so much strength of GBP against the Japanese yen, you don't see that as evident when you're looking at GBPUSD because of the strength the US dollar is still holding. So we're in a very tight range on GBPUSD, and it's best just to play these safe trade ideas. If the US dollar gets weaker and fails to break so I would only be looking for GBPUSD buys. I need a break above 1.365, dollar to turn bearish and reject highs, strong UK labor market data. And those buys would be just pullback buys on the higher time frame to set up better risk versus reward sells at a retest of 1.378. Or I'm looking for sells below 1.1355 with continued US dollar strength. All right. Because just because GBP is bullish against the Japanese yen doesn't mean you're going to have the same order flow movement against the US dollar, because the US dollar individually is holding a lot more strength compared to the Japanese yen, because global investors are pricing in tapering to come by the Federal Reserve. So you have this individual fundamental impacting factor on the US dollar where it's having a lot more strength because of that pricing in of tapering to come, and US economic data being more on the rebound. Okay? So these are the GU trade ideas. Green boxes being buy areas, red boxes being sell areas, with the reasoning stated, and mainly playing the US dollar correlation on GU, EURUSD, and USDCAD. Now, Euro has not been holding as much strength compared to GBP and is overall a lot more bearish and showing us a lot more sellers pressure as well. So on the short term, I can only see a potential for pullback if we come above 1.156, but even that pullback is to pretty much set up better sells at a retest of 1.63, or cleanly sell below 1.163 and 1.5100. So if we break above here, short-term buys to set up better risk versus reward sells, or just continued sells below the current lows at 1.154 and sells below 1.5100. Okay. So I would only see short-term pullback buys on Euro USD to play the range from 1.157 up to retest better risk versus reward sells at previous lower high point and higher time frame key level 1.63. If we do not get that pullback, do not look for any buys. Just look for continuation break of low sells at 1.154 area, with confirming euro data being poor overnight if the German data is still lacking. Breaks below 1.154, dollar still holding strength individually when you're looking at the dollar index movement, and play those sells accordingly. Okay. The hell happened? TradingView just froze here. I don't know if my internet just went out. I don't know what the hell's going on here.